Hello and welcome back to this edition of Daily Actives brought to you by Bootleg Macro. I'm Dustin. We're looking at Tesla once again. I hope you watched my video from March 25th or March 27th when I told you to sell Tesla because it looked like just not great. To be honest, I have no disrespect for the company, the products, the CEO, and or the mission. But when I look at the stock and what's going on right now, I have no reason to believe that I'd want to give them $1 of my money. The reason why is if we look at the 1 day, which were down nearly 5%, the 5-day, 15-day, 1 month, 3 months, 6 month, and 1 year. I don't even need to call out the percentages. They're all incredibly negative. Now, that's not great. If we go ahead and look at the raw data here, one of the things I want to point out, and I did point out in my most recent video on the 27th, was that just because we were getting some go long signals in the short-term signal indicator, that did not necessarily mean that things were positive in Tesla. And the reason why I said that at the time was because Tesla was essentially coming off of a very aggressive fall where it was over $200 at the beginning of March, very end of February, all the way down to the mid 160s. And it just recovered from the mid 160s up into the mid 170s. That did not necessarily make it bullish. It just because the way that I measure and I map specifically how stocks move, it made it look bullish on my model here. But that's the important part, I think, about individuals being able to understand their own model and understanding how to be able to read it. Now, if we continue, one of the things that we're looking at is the price yesterday was above the 5-day moving average. It's not going to be tomorrow. It was above the 23-day moving average. It's not going to be tomorrow. If we look at the overall signals, we do have a go long in the short term and intermediate term. I'm imagining that those are going to very quickly be completely irrelevant, as well as what we see here in the trend indicator. And we saw a little bit of bullishness in the short term and in the intermediate term. On the longer term, we have been bearish. We've continued to stay bearish. If we look at the overall rolling trend as well, we can see that we've got a rising bull. But again, that's because previously we were down at 32, 31% when it came to the 10-day bullishness. If you've watched any of my previous videos, this is a rolling sentiment indicator. This is based off of 100%, which means that you can never necessarily go to 100% because that means that you'd be 100% bullish and 0% bearish. That's an impossible market. You need sellers to have buyers. But what you want to look at is who's winning the fight. Now, if we'd been considering what was going on in the 10-day bullishness, we would have said that the bullishness was winning against the bearishness. That was incorrect. All we were seeing was a reversion to the mean because we got so low. This indicator generally cannot go below 38 to 35%, and it cannot go above like 62 to 63%. The reason why is because it wants to stay in a yin and yang. The perfect balance here is when it's at 50% perfectly. Right now we're at 46. The idea that we'd get up to 53 after being down at 39 and it wasn't going to have an impact, that was laughable. Now we look at the overall trading signals. We do see we've got multiple of the rising bear Q3 and the rising valley again. This model can be tricked just like every single sense of analysis. That is why you're looking for someone who not only understands their model, but understands exactly why their model is built that way. Now, if we go ahead and look at the overall charts, we can see Tesla, yikers. Don't you wish it was that first chart? I do, because I would like to be covering Tesla in a bullish manner. But unfortunately, it cannot break 200 as it was rejected here in March of 2024. It could not break it in February of 2023, but then it ultimately did, but then could not break 300 in July of 2023 and has since receded. Now, if we look at the daily chart, again, things are just ugly. I don't like what I see here because I don't see any specific trend. Obviously, it's generally bearish, but it's not a direct trend. We're seeing too much gaps, too much gapping, too much volatility, to be honest, about what I think you should be looking at here is something that is super high volatility. It's going to take a very small position size from you. And is ultimately probably going to break your heart because no matter what you think is going to go on in Tesla, you're going to get your face ripped off unless you have a long-term leap that is essentially bearish, and that was probably around $200. But right now, what I'd be saying is stay clear, stay honest about the fact that the largest day in volume in the past few days was on a down day. On the second there, you see 116 million shares traded. You see the volatility is even rolling over. I imagine the volatility is going to break back out, and or the correlation. Yeah, it's just tough because the volatility is breaking down. And the correlation, it looks like it's starting to rise. So you see that, like, that's a small change from negative 35 to negative 35.02. That's a really small change. But in the significance of a second derivative, as well as the overall volatility of Tesla, which is generally pretty high, you have a 15 at the low recently. This is going to be a move that's going to rip a face off. The top of the range is screaming down. It's at 196. The bottom of the range is screaming up at 155. It's probably going to go down. I expect it to break down below this 148 eventually. And to be honest, I don't know why you'd be long Tesla unless you have some vested interest, some capital gain, some reason that makes you have to be long it at the moment. And again, this is not financial advice. But one of the things I do want to point out, just as I'm closing this video here, is if you like the idea of looking at the range, if you like the idea of where the price actually sits relative to the range, and you like the analysis that really breaks down what is happening to the range itself, because I think that says a lot, I have something actually for you. I have a new product which I'm offering. It's called the Equity Evening Insights. The product here, what it is I've built an app. I don't have the ability to get it to you just yet. I'm going to hire a developer, but that's going to be with your help. What we're going to do together is, if you want to pay $25 a month, again, there's a free trial if you want it. $25 a month, I'm going to send you a list of 25 plus stocks as well as sectors, their close, their volume, their daily sentiment, their rolling 20-day moving average, their low range signal, their buy bottom, sell top, and high range signal. Now, what you're going to end up receiving, if we go here, you're going to end up receiving this entire list given to you every single night. I haven't updated it from yesterday. This is still the actual output from the 1st of April, pretty much useless today. But I do want to point out that yesterday, when I was looking specifically at Tesla, since we're covering it here in this video, I was saying lower lows, and it's right below its 20-day moving average at 176. If you watch my previous videos, I was highlighting the fact that where Tesla was relative to its range, and the fact that you had a lower high in its range, was more indicative, as well as it's bearish, more indicative that bad things were going to come for Tesla than good things were going to come. That's why I was short. That's why I was paying attention to being bearish. And that's the reason why I recommended looking at Tesla in that light. It wasn't just because of anything. It was just because of the data and the way that it presented itself. Tell me what you think in the comments below. Are you long? Are you short? Do you like it? Do you love it? Is this even a good review? I'll talk to you soon.